Welcome everybody once again to the Decarbonization Roadmap webinar, where we'll be talking about how to go from targets to capital allocation. And welcome everybody. So before we dive into the discussion right away, I will just like to set a little bit of context on why are we even having this conversation right now. Globally, we are seeing that it's unprecedented momentum for the decarbonization journey. 195 countries have committed to the Paris Agreement. Then more than 130 trillion dollar assets are under management, which are now demanding climate disclosure. Then there is a regulatory wave which is spreading all across the continents, from EU's CSRD to the ISSB standards, and most importantly for the businesses, access to the green finance, customer preference, and talent. All these things are forcing the companies to jump into the decarbonization journey themselves. So it's just clear that this is no longer optional now. It is just a competitive advantage. Now, if we come a little bit closer, if we look at what is happening here in the Middle East, then we are witnessing a dramatic transformation throughout the regions. The UAE is mandating full compliance with Federal Decree Law number 11. Then Saudi Arabia's Tadawul moving towards the mandatory ESG reporting under the Vision 2030. Then we have Oman's stock exchange, which requires standalone ESG reports from all the listed companies, starting, I think, 2025. And this region is just clearly, collectively moving from voluntary frameworks to enforceable mandates. So this is what is happening at a regional level. And now, if we zoom in to UAE specifically, then since this is the most immediate regulatory deadline for many of us, so Federal Decree Law number 11, which is fundamentally changing the game now, which is effective from May 30, 2025. And we are already in the compliance window. The full compliance is required by 30th May 2026, which is just a few months away now. And it applies to all the entities, public, private, free zones, and there are no exceptions basically. So the mandatory GHG emission measurement, reporting, and verification is not far anymore. And there are penalties ranging from 50,000 AD to 2 million AD for non-compliance. So this is something which is clearly sending a message that decarbonization is now a capital allocation decision, not just a optional thing to do for companies. Now that we have set the context, I will just quickly walk you through what we will be covering in today's webinar. And we'll be basically focusing on 4 major segments. We will start with establishing the foundation about what data, infrastructure, and readiness do the companies need. Secondly, we will be going from targets to execution as to how do you build finance-ready plans that your CFOs will approve. Thirdly, we will be talking about capital allocation and governance. We will be talking about how do you integrate climate into existing systems without bureaucracy. Lately, we will be going ahead and talking about funding and long-term strategy. What options do you have? What are the financial instruments and strategic choices that you have to support in your transformation journey? So, and finally, we will be closing with key takeaways and your questions. So you can see this as, you can think of it as foundation, going towards strategy, then moving ahead to execution, and then finally, how do you finance all the execution? So this is the journey we will be taking with you today. And feel free to jump in, feel free to drop in your questions wherever you have throughout the webinar. And we will be taking all of them later. After the webinar is done, we will be taking question answers. And I would go ahead now to guide us through this journey, we have an exceptional panel representing three critical perspectives of the industry. So, firstly, we have Prakhar Gupta, who is the head of sustainability and ESG practice at Ascentium India. Prakhar brings over 13 years of experience across sustainable strategy and finance. As a chartered accountant and MBA, he's advised over 150 entities on their ESG journeys. He also serves as a special invitee member on the ICAI Sustainability Reporting Standards Board. He brings the consultant's strategic lens into our discussion today. Next, we have Shipra Saxena with us. She's the General Manager of Corporate Responsibility at Transworld. With nearly 20 years of experience across social development, CSR, ESG in India and UAE, Shipra holds a Master's in Development Studies from Erasmus University of Rotterdam. At Transworld, she manages the group ESG strategy and programs implementation. She kind of brings the company practitioner's reality check for us. And then we have Karan Raj Singh, who is the co-founder of Breathe ESG. Karan has extensive experience in ESG strategy and sustainability technology. As a co-founder of the DEEPAM initiative, he is advancing climate infrastructure and community impact. His education focuses on sustainability and business strategy, so he kind of brings the technology enablers perspective to our discussion today. So together they will form a power trio of consultant, company, and technology. So let's dive in. And since we are talking about decarbonization journey, I think for some of you who might be a little early in the journey, I think this is just a basic, some ESG jargons which will be used throughout the discussion. So decarbonization essentially means systematic reduction of carbon and greenhouse gas emissions across all the operational boundaries. And this is done to achieve net zero targets. So this is what it is essentially about. And the greenhouse gas emissions are categorized into three scopes. Scope 1 is the direct emissions. Scope 2 is the indirect emissions. And the scope 3 is everything beyond scope 1 and 2. It is everything starting from your business travel, supply chain, product use, end of cycle disposal, etc. So scope 3, of course, is very wide. But this is a little bit mandatory to understand right now because Decree Law 11 is mandating scope 1 and 2 reporting, with also scope 3 required for certain industries. So this is something which you will come across a lot going ahead. And with this, I will directly pass on the baton to our speakers. Let's hear it from our first panelist of the day, Prakhar. So Prakhar, as a consultant who has advised over 150 entities in their ESG journey, can you throw some light on what emission data repositories and systems do company need to have in place before they even start on their decarbonization roadmap?
Yeah, thank you, Namrata, for a very warm welcome. Hi, everyone, all the participants and the co-panelists with me. To answer your question, Namrata, I just and also to connect with what you have already mentioned, which is scope 1, scope 2, scope 3. I think we should divide the whole data set into two broad segments. The first segment of data would be largely with respect to getting the base data to calculate the emission. So even while calculating the emissions, we have to go further level down in terms of identifying the sources of emissions. So we have to do a identification exercise wherein the first data set is what are the locations which will be participating in the overall emission space. So what is your boundary looks like? So how many entities, how many physical locations will be covered? What are the different sources of emissions has to be identified in each of these locations and the legal entities which we are trying to cover as a part of the repository. So what is the boundary? That is first. Once you have identified the boundary, the next level of data would be that, as I already mentioned, the sources of emission. So for each category of emission, which is scope 1, let's say the sources might vary. You can there could be some stationary sources like plant and machinery within a given plant and setup. There could be non-stationary sources, which is vehicles and commercial vehicles of the world, which are non-stationary in nature. And there could be also fugitive emission sources, wherein, like, for example, AC or refrigerant gases, which is being consumed within the automation. So these are the sources which is relevant to scope 1 category. Similarly, for scope 2, we have to identify the energy which the company is buying currently. So usually electricity, for example, is one of the key energy source which most of the companies buy today. So what is the consumption of the energy is something which we have to start tracking. Most of the companies today are tracking the financial commitments or the financial outflows on most of these parameters, and they're not tracking the consumption of some of the in most of these parameters. So that's where the electricity comes in to support you on the scope 2 front. And then scope 3, as you mentioned, is a vast exercise which with 15 different categories. So one has to go category by category and then define what are the upstream data sources which you want to capture. Some of them are like what is the procurement and the quantity of procurements which we are doing at the procurement stage. What capex has happened during the year? Again, in the quantitative formats which has to be defined. What is the business travels which has happened during the year? How employees are commuting, and the data of commute has to be tracked. So it's a very intense data collection exercise which has to happen at the stage 2. Once you cross through this journey, the third and the last step is to also get the relevant factors of emission. So what you are being asked to report is the carbon number. So for each of this activity, how do you translate this data, activity data, into a carbon emission data? To bridge that, there has to be an identification of relevant emission factors. Now, these factors are being published by various different agencies across the globe. So you have IPCC as a factor, you have different protocols which has to be defined and identified, and these factors has to be sourced from these repositories. So for relevant, let's say, for example, electricity, if the consumption is happening in UAE region, the relevant emission factor for that region has to be identified. The electricity consumption data has to be multiplied with this factor. And then you will derive an emission which has happened during the given period with respect to the electricity. So that's how you will take forward this.
Okay. Thank you, Prakhar. This was a very insightful discussion, but I just heard a lot of data. A lot of data is required, and a lot of um, multiplication, or a lot of maths, a lot of things that you just said. So I can understand that it's not easy. Probably it's not doable at say Excel level or something. So I think next let us hear from someone who is helping or kind of providing the infrastructure to the companies. So Karan, uh, you provide the technology infrastructure for emission tracking to the companies. So uh, can you please tell us where do most organizations struggle when they are moving from, say, spreadsheets to such scalable platforms to manage all the data? Can you please throw some light on it?
Yeah, absolutely. And you're correct, right? While Prakhar and I might have a very good understanding, and obviously Shipra as well, about emission factors and how data really needs to be mapped to someone doing this probably for the first time, it can get a little confusing, right? So from a practical standpoint, compliance, right, is not really a reporting exercise. We're looking at it more from a data architecture exercise, right? Especially pertaining to something like Decree 11. So companies really need probably three things in place. Firstly, right, before I sort of get to the where they really struggle. The first thing is really a well-structured emissions ledger, right? So most companies, even today, right, especially in markets closer to home, right, treat carbon data almost like an Excel side project, right? But what really companies need is a well centralized system where every activity data point, right, whether that's fuels, consumption, electricity consumption, right, logistics, procurement, are mapped to what Prakhar was saying, right? Emission factors with a very, very clear audit trail. Because if you're unable to explain where a number came from, right, then you are not compliance ready, right? Especially looking outside of the Decree 11 lens, also going into something like CBAM, right, where transparency is coming into full force, right, making it sort of non-negotiable for companies that fall under CBAM sectors, your iron and steel, aluminium, cement, fertilizers, hydrogen, electricity, right? So while emission factors is something that might be complex, right? That's where a digital architecture can actually come and make it simple with today artificial intelligence that can actually sit in and map out emission factors for, let's say, your hundreds and thousands of rows of procurement, right? We do it for companies that have billions of dollars in spend, that sort of make it very, very simple, right? The second is we also need to look at asset level traceability, right? Which again, Prakhar mentioned, where ESG is not something that is top down, right? Sustainability cannot be top down. It needs to be bottom up, right? Where you need a lot of granularity, right? So not company wide totals, right? But facility level, fleet level, unit level emissions is something that we need to take into account to survive your assurance reviews, right? And lastly, I think would be your workflow discipline, right? Because a lot of the times you don't really struggle because of the math, right? The math is easy to do. You struggle a lot because of the process, right? Where is your data coming from, right? Is it from an individual at a location? Is it from a third party system, right? Who is inputting the data? Who is verifying the data? Who approves data, right? So you need to sort of create a system where you have those role based controls in place. You have timestamp logs, right? And then obviously integrations are also very, very crucial, especially for larger businesses, right? Because automation is something that, makes life easier as well as increases the quality of data, right? Um, what's also important to note, right, specifically from the UE context, is that Decree 11 also requires 5 years of traceability for your sustainability data from your first year of reporting, right? Which also then means that you need a digital ledger, right? Especially for those companies that fall under the high risk sectors, right? Crossing those 500,000 tons of emissions, where that sort of becomes something that they can't ignore. So to answer the main question in terms of where they struggle to move, right, from spreadsheets, it's as probably psychological and as sort of deep rooted in SOPs and policies as it's technical, right? So, number one, I think companies underestimate data ownership, right? So they live and I mean, they have the luxury of living in this AI fever dream, right? Where technology and AI can sort of solve everything for you, which is not the case, right? Because AI is only good as good as the data that you give it, right? So that's where data ownership really comes into play, right? They assume sustainability teams can run it alone, right? Which is, and Shipra can probably attest to that, where हमारा ESG team है, my ESG team will handle this, but it also sort of ignores that this is cross-functional, right? So every team really needs to participate in a company's sustainability, right? Whether it's with data, whether it's with initiatives, right? And companies don't really involve finance early enough, right? Uh, and that's something also that's very, very crucial to do at the early stage. So, what's really important for companies is to move from reporting data to really governing data, right? And that should solve majority of their problems.
Okay. Nice viewpoint, Karan. So I understand that it's not just a one team task anymore. As you said, it involves a lot of multi cross-functional units to work together. So I think let's now hear from someone who has undergone this journey firsthand.